Hi, this is Dan Collins again, back with you live from the Las Vegas Traders Expo. I'm joined with Dan Gramza, an old friend here. Dan had been talking about crude oil and the energy complex and some of the geopolitical concerns that are affecting it. You know, crude oil has been very interesting, but the other part of the energy complex, natural gas, it's not gotten a lot of press lately, but you're saying there's a really interesting market right now.
Yeah, you know, Dan, I think so. And I think so on a couple fronts. Now, what we've seen recently, just over the last few days, we've seen a vertical movement in that market. It's kind of stimulated by some cold weather in the northeast part of the United States. The very northeast part of the United States, we still use a lot of heating oil there, but it does affect the east coast of the United States. We use heating oil, we use natural gas, about a third of it to heat our homes and cook our food, about a third for industrial production, steel industry, chemical industry, huge consumers of natural gas, and then to produce electricity. We now produce more electricity in the United States with natural gas than we do with coal. So that's our situation there, but here's what, and so we've seen natural gas come up. So, go ahead.
Okay. When natural gas, when crude oil spiked to like $147 in 2008, natural gas spiked up to $15, and that's still the price of for crude to natural gas was smaller then than it is now. All the experts says crude's never going to get below $5 ever again. Well, we learned, never say never in this trading business. Then crude actually got below $2 and really sustained a low level for a long time. So now we're seeing volatility back. How high can natural gas go?
Well, natural gas, you're right. We did see that back off, and I remember when it was $12 to $15. I was getting kind of bullish on that too. But we had game changers. We had the ability to drill horizontally, changed everything for the industry. I was investing in some companies that once they started drilling horizontally, our production increased dramatically. So we had tremendous increase in production. But the wells also were depleted faster. So there was something there that we saw. But so the natural gas supply situation changed. And the other thing that's fascinating to me is what happens globally. In the past when Russia was squeezing Europe, remember that one? And they said, oh yeah, you gotta pay us some money. And well, people were saying, why don't the United States send them natural gas? They got all this natural. We couldn't because we didn't have the facilities. That's changed. We do now have export facilities on our coast. We finished some projects on the East Coast. We're also seeing a change in Europe, which is fascinating to me. Russia's building a northern pipeline to Germany, and people are saying, oh, that's going to close off the Ukrainian pipeline. It won't, because that one pipeline is not enough to feed Europe. But the other thing that changes, Poland and Germany, they're building import facilities for natural gas. Now Russia, who used natural gas as a political tool as well as a source of income, that political side is changing. They now have competition. The U.S. now can supply natural gas. So the inner dynamic of natural gas in Europe, I think over the next year or two especially, it's going to change.
Yeah. And Asia as well, right? Because
That's
Japan had lost all its nuclear capabilities. They had to transfer to natural gas, so that's a lot more demand there.
Oh, that's an excellent point. And they have to import everything. They don't have any domestically enough production in any form that would help them. And they are turning some of the nuclear facilities back on, but they still need that natural gas. So you're right. Japan's a good example.
Okay, Dan, before I let you go, I wanted to ask you one more thing, because we touched on this with some other speakers today, and how the market, because we had a dramatic day yesterday, a drop of 600 points in the Dow. Mm-hmm. We've had a huge, a legitimate correction of 10% or more in October. Mm-hmm. And you look at so many different markets and different perspectives. But you made a point to me earlier that when you have that kind of increase in volatility and VIX grows, it's not only how you look at equity markets, but it can affect other sectors. What should traders be looking at in a period, if you believe we're actually moving into a period of higher overall volatility?
Well, I guess I think of a couple things, Dan, and you're right, it does go across the board. forward. So if you look at currencies, interest rate, metals, although metals have been a little sluggish, we were talking about energy, even down to agriculture markets. I think when I look at some of the increases in volatility, I like to look at fundamentals from the point of view of what does it represent? Does the fundamental that we've been seeing represent concern? Well, concern does not drive a long-term trend down. It does increase volatility. The market's concerned about earnings. It's concerned about tariffs. It's concerned about the Brexit deal or no deal in Europe. It's concerned about Italy not getting their budget approved, and it may have weakened some of the things when it comes to the euro. So we have those concerns, but those aren't sustainable. That's different than if you and I see fundamentals that are an economic reality. That a concern is something that's going to happen in the future, may or may not happen. Economic reality is something that's happening. We don't have enough soybeans. Well, we have plenty of soybeans. But if we didn't have enough soybeans, and that trend could be a very strong trend. So those I give and the reason it comes into play for trading. If we have a strong economic trend, I leave it a looser stop when I trail my stop because I'm thinking I could have a stronger trend. If you and I are trading a market that has concern, then I want a tighter stop because that concern comes out, that market could easily pop the other direction.
Important things to think of. And Dan, thanks for joining us. This has been we've been live from the Las Vegas Traders Expo. I'm going to see if I can drag Dan for one more section on it. But thanks for joining us.